Good evening and welcome to AJP. After yesterday's record-setting crash, all three Northeast Asian markets tried to rebound today, but only Korea and China made it back into the green. Here's the story of the day. One Wall Street shock. Three completely different recoveries. Yesterday, a memory chip sell-off on the Nasdaq smashed every market that lives on artificial intelligence demand. Today, Korea bounced hard. China rallied on its own homegrown chip trade, and Japan, alone among the three, finished lower. The Korea Composite, the KOSPI, closed up more than 3%. China's Shanghai Composite eked out a gain, but Japan's Nikkei 225 fell again, dragged down by the very chip equipment companies that power its market. So the same shock that hit all three left Korea and China climbing out of the hole, and Japan still sitting in it. And as you'll hear, even Korea's rebound hides a more uncomfortable truth underneath the headline number. The KOSPI closed up more than 3% at around 8,471, clawing back a chunk of yesterday's roughly 10% collapse. But look under the hood, and this was not a confident rally. Foreign investors sold a net 4.5 trillion won of Korean stock today, even as the index rose. The buying came entirely from local hands. Individual investors and domestic institutions together poured in more than 4 trillion won. In other words, foreigners are still walking out the door, and it was Korean retail money that caught the falling knife. The headline name was Samsung Electronics, which jumped more than 9% to around 338,500 won, or about $220. The catalyst: reports that Samsung plans a share buyback worth around 90 trillion won, tied to employee stock bonuses. That is an enormous number, and it lit a fire under the stock. Partly because Samsung is fighting to reclaim its crown as Korea's most valuable company after briefly losing that title to SK hynix this week. And here is the tell. SK hynix, the high-bandwidth memory leader at the heart of the AI trade, rose only around 2.5% to about 2.6 million won, or roughly $1,700. When the buyback story drives Samsung up nearly fourfold versus hynix, that is investors reaching for a company-specific reason to buy, not a broad return of faith in memory chips. Outside of chips, Samsung Biologics climbed more than 9%, to around 1.39 million won, or about $900, a sign the bounce reached beyond semiconductors. China tells the opposite story. While Korea's rebound leaned on one buyback headline, the Shanghai Composite's modest gain to around 4,110 sat on top of a broad homegrown chip rally that barely cared what the Nasdaq did overnight. This was a domestic self-sufficiency trade. Semiconductor, chip equipment, and chip packaging sectors all rose between roughly 6 and 8%. The clearest way to see it is the full manufacturing stack lighting up together. SMIC, China's largest contract chip maker, rose nearly 8% to around 153 yuan. Cambricon, the marquee artificial intelligence chip designer, added about 3.5% to around 1,462 yuan. And JCET, the country's biggest chip packaging and testing firm, surged the daily limit of 10%. Notice the pattern. The company that physically makes and finishes the chips, JCET, ran hardest, while the high-profile AI designer lagged. That is a market betting on building out domestic capacity, not just chasing the AI brand names. Beneath the large caps, dozens of smaller chip stocks on Shanghai's star market hit their 20% daily ceilings, and one new listing rocketed nearly tenfold on its debut. It was, in short, a risk-on day made in China. And then there is Japan, the market that did not get the memo. The Nikkei 225 fell nearly 1% to around 69,175, extending yesterday's losses while its neighbors recovered. The problem is what Japan's index is made of. Where Korea has a buyback story and China has a domestic policy tailwind, Japan's heavyweights are the global chip equipment makers most exposed to the same AI spending fears that started this whole sell-off. Tokyo Electron, the equipment giant, fell more than 4%. Lasertech, a key supplier of chip inspection tools, dropped nearly 3%. Even Advantis, the chip testing leader, slipped into the red. The yen, meanwhile, sat near 161 to the dollar, offering no rescue. With no domestic catalyst of its own, and a lineup tied directly to global semiconductor capital spending, Japan simply had nothing to push against the tide. When the AI trade wobbles, Japan's market structure means it feels the aftershock longest. So one shock, three outcomes. Korea bounced on a buyback and domestic buying, but foreigners kept selling. China rose on a self-contained chip trade that needs no help from Wall Street. Japan fell because its market is wired straight into the global AI spending machine. The open question now is simple but uncomfortable. If foreign money is still leaving Korea even on an up day, was today a genuine recovery, or just a pause before the next leg down? With Micron's earnings due, the answer may not wait long. We'll be back tomorrow to see whether this rebound holds or fades, and whether foreign investors finally stop selling Korea. Until then, please subscribe to stay with us for the closing bell across Korea, China, and Japan. Thank you for watching AJP.